Well, I think it's clearly encouraging that inflation took a large step down in April, but much of that was already known. We had a 12% fall in the Ofgem energy price cap in April, which feeds directly into the inflation print. So we knew there would be a large downward influence from that. But as you said, we were all watching that services number because that's what the Bank of England is really concerned about at the minute. And it's a hurdle for the Bank of England to cut in interest rates. That didn't come down as much as was expected. It only came down a small amount, and that will definitely be of a concern.
So traders see just 38 basis points of Bank of England rate cuts in 2024 post the UK CPI. So that's, so that's 1.5 rate cuts in 2024. Now the market is pricing in. Does this give the Bank of England pause? Does it stop them going in June? Does it push the move out to later in the summer, Ellie?
We think that the June decision is on a knife edge. It's a very close call. There's clearly sentiment on the committee for lower rates. At the last meeting, we had 2 members vote for lower rates. It would only take 3 of their colleagues to join them to change the majority position. But it really depends on how the data evolves between the last meeting and this meeting. Today's inflation print wasn't very encouraging in terms of it was above what the Bank of England expected. But we still do have a labour market report. Clearly, that's very important. Megan Green said this week that the labour market report will show 40% of annual wage settlements. So clearly that wage number is very important. Although high wage growth for the household is a very good thing, from an inflation perspective, it does risk more persistence and a block to getting inflation down to 2% on a sustainable basis. But members have said that, look, summer is in play. Whether summer is June, whether it's August, remains to be seen. But we should see lower interest rates by the end of the year. I think this is a very different ease-in cycle to what we've had in the past. The Bank of England isn't cutting rates in response to a sharp economic shock, so it does have the ability to be patient, to cut rates, wait and see how the data evolves, wait and see how the economy responds, and then go again. So we think that the Bank of England will take a gradual approach to easing, bit by bit, and see how the economy fares.
We heard at the beginning